Hello, how do I analyze stock charts for swing trading without indicators? So let's take two stocks here to analyze together. The first one is SPGI. Using Think or Swing platform, we are going to use maximum daily chart for our chart analysis and for our buying and selling decisions making as well. So looking at SPGR, you can see that we do not have any indicator or moving averages on the chart, and we have support lines that we trace that we have been paying attention to this year 2025. We have the dates on the x-axis from the past to the present. We have the price on the y-axis from $0 to infinite. And by looking at the chart, we are going to compare where the price is right now to where we want to buy. So we have long uptrend lines that we trace because we are trading upward stocks. We trace upward trend lines, and we choose the one that long enough that we think is low and long to be the valley line, the valley support line, the support line passing by the valley of the mountains or the higher lows of the chart to be where we want to buy the stocks when the stocks pull back to it and start going up from there. Therefore, our chart analysis consists of just looking at where the price is to where we want to buy. If the price is far from it, there is nothing we do. We are not going to buy. We just move to the next stocks to analyze. When we are looking at SPGI, we'll notice that yes, today is October 25, 2025, and Friday, which is yesterday, the price went up. The price closed on green, meaning the price at the end of the day was higher than the price in the morning when the markets opened. So the price went up yesterday. In addition to that, you'll notice the direction. I'm not zooming in when I'm doing this analysis because I want to see the overall trend of the chart and see in which direction the chart is going. So that's why we use maximum daily chart. By using maximum daily chart, we are using the valley line, not all-time valley line. It might be too low. The chart may not go back that low, or the price may not go back down that low, but we want the trend line to be more than 1 year time frame that the price pull back to and move up from there, starting a new cycle. And by using a maximum daily chart, we can see the all-time high price, the highest price as well, because we use that as an exit strategy among our 3 exit strategies that we have. The first one is the next high. When we purchase the stock, the next new high is our first exit strategy point, and that's when we start asking ourselves if we want to exit the trade or if we want to stay in longer. So by looking at this, but you'll notice that it's going up here, just short uptrend there. But then by looking at a bigger picture, you will see that it reached an all-time high this year not too long ago, and then has made few lower high from there, and that just means it start making lower lows, and that means just by looking at, you see those V, for instance, this is another V here, and this is another V here. I tend to focus more on the support line rather than the resistant line. The resistant line is a line like this one. It passes by the peak of the mountain. The chart swings, so it will be making, I like to say mountain. It will be making mountain. So when you have a mountain like that, you'll have the peak and then you'll have the valley. So we want to buy it at the valley when it starts going up, and we want to sell it at the peak before it reached the highest peak and decided to go down. So we want to buy and sell on one side of the mountain, the upside of the mountain. So it reached the highest peak so far when it left this support line 2 years ago or so in 2023, and this is 2024 and this is 2025. So it reached the highest peak not too long ago and start going down from there. So the bottom of this V is lower than this one, which is pretty much lower than that one, which is lower than that one, which is lower than that one. So it's making lower lows here. That's what that's what showed the drop in price. One second, they change direction for in the chart as well, or price. But then it pulled back, went up a little bit here, but didn't go far, and pulled back again even lower, and then this week it went up a little bit. But we could just say that it's trying to rest on this support line here. So whether it's going to rest on that support line and go up from there, we can adjust the line a little bit. This support line will just be a support line supporting the upside wall of the mountain, because when it started with this support line, it left there, it went up, pulled back, and reached the highest peak somewhere here. When it started, the circle ended here, this circle ended here, and new one began, and it came back to the support line twice before it reached the highest, the new circle highest peak that exceeded the previous one. And from there it continued to go up, pull back to this support line, and then went up again, you know, new highs all the way there, and then pull back. So it could well just pull back to this support line to rest a little bit and go up from there, or it might just be done with this cycle, which began from here in 2022 all the way to that peak, and it might just be done with it and it's on its way down to the valley. We don't know. We are just going to keep observing it, and when it reach this support line and start going up from there, we start seeing higher lows. We can see 3 or so higher lows, and by higher lows, you see this V, the bottom of this V is higher than this one, which is higher than this one, which is higher than this one. So for this, let's say this is a support line, for instance. When we have 1, 2, 3, we could buy at the first or second green bar that follow a pullback. So that is those obvious V's. What I like to do though is when it pull back and start going up and start, you know, making higher lows, I use the red candlesticks, which are the days that the price drop, the days that the price at the end of the day was lower than the price in the morning. I like to use those. So it does not necessarily have to change direction, because you can see that if you are buying it somewhere here at the first or second green bar that follow this pullback, you'll be paying quite a bit of higher price compared to if you purchase a, let's say this is a higher low compared to this one. This one is higher than this one, and this one is higher. We have two candlesticks there that are red, but we will use the last one before this green bar is higher than this one. So 1, 2, 3 higher lows. We can buy at the first or second green bar that follow this pullback. So if you get in the trade around here, you can see the corresponding price to if you get in the trade around here. So there is a big difference, but I tend to more get in the trade around this area. And a lot of time when I do that at the support line, it could just well be that it was not done, it was not ready to start going up yet. So it might pull back again before going up. And sometimes I tend to enter the trade a little bit early. But what I'm trying to work on is to be able to determine my valley line so that I purchase it at the valley line when they start going up from there. When they start going up from there, it's just an indication for you that maybe it's done going down, it's getting ready to start going up. And that is why I'm working toward to be able to determine the valley line, because some support line for the upside wall of the mountain can look like a valley line, especially for stocks that are up, that have a steep growth for some years. Their chart can look very steep for for a certain number of years that you might wonder if it's going to keep that direction and keep the supporting that uptrend line as a valley. But sometimes it can be done with that growth and pull back to a lower support line before start going up. So to be able to determine that valley line and differentiate it from the support line that is supporting the upside wall of the mountain, that I think that is where the challenge is, or is what is crucial, because that's what will allow you to buy the stock at a low price when they start going up. Because if you buy at the support line that is supporting the upside wall of the mountain, you will have entered the trade little early. When it's done climbing up and it's on its way going down, if you purchase it around this support line, you'll get stuck in the trade. It will go up, it will be negative in it for the time that the candlestick, the chart will be below where you purchase it, until they start going up and surpass where you purchase it before you start seeing gain in that trade. So to be able to differentiate the valley line from the support line supporting the upside wall of the mountain is crucial in knowing where to buy the stock. So but yeah, so for this one we chose, sometimes we pick 2 lines or 3, but then as the price is progressing, the chart continue, the price is drawing the pattern, we will notice that now a line among the one we select to buy at could well be a support line for the mountain. That's why we tend to have a watch list of stocks that we can just swing trade from, so that we can keep analyzing the same stocks over and over, pretty much for an entire year, to familiarize ourselves with those stocks on our watch list and be able to trade it without fear. So, and it's very good to have a watch list of good stocks that if you buy it too high, you don't worry about anything. You'll just stay, it'll just become an investment in your portfolio until it start going up again. And when it become profitable, you can sell it. I have some stock that I purchased in 2024 that I have not sold it yet, and the majority of those stocks are negative in our portfolio, but I'm not worried about it. And some of them pay dividends, some of them don't. So for this one, the next one is going to be SYP. And I believe SYK was one of those stocks that I purchased in 2024 and was negative for a while before I sold it. So by looking at SYK, we have two lines that we decided to be support line for us. But again, we don't know if this one is going to be a valid line or this one. At this point, this is what we are going to keep as a valid line. I think this is just a little bit high to be one. But, and when we are looking at it, it touched base with this. By the way, Friday, the price went down. So the price at the end of the day was lower than the price in the morning. So the price is red, it's highlighted in red. But when you are looking at it, it touched base with this support line and start going up from there. So you can see that in, we have it went up, pull back, went up, and we have some red bar there, but in the same upward facing direction. But yeah, it seems like it pulled back to this support line and start going up from there. But again, we don't know if this is a valid line. I just think it's just so higher up to be one. So we have both highlighted, but we are not buying anything, because if this turns out to be a support line for the upside wall of the mountain, it seems like then we can say that it's making a chain of mountain around here, and at some point it might be done with that chain and might come back down. So you can see some arrows on it. In 2024, we traded using short upturn and swing trading strategy. Arrows facing upward are where we purchased, arrows facing downward are where we sold. So we purchased a few times and we purchased it again, and then it pulled back to this support line toward the, so we stay in there for like what, 1 month in 2024, and it pulled back and start going up from there. When it reached a new high a few days later, we sold it. So after a month in 2025 as well. So maybe 3 months we remain in that trade, and the majority of that time frame we are negative in it. We didn't sell it at a loss, we just let it be, and then we sold it for a profit. But then after we sold it, it pulled back. It seems to me that each time it reached a new high, it tends to pull back a little bit to rise. So it pulled back down, but we didn't buy it again. You notice that when it pulled back, it started making those mountain, but they are not as taller as the previous one. So we don't know. And if you look at the lows, they are a little bit lower as well. This is lower than that one, which is a little bit lower than this one. And when you are looking at the peak, this one is higher than that, but this one is lower than this. So I prefer to compare the lows, but the peak will be obvious for you to see as well. So those mountains are plateau, maybe. I don't know if you guys say colline in English, but those kind of small mountain, it's not tall enough. It's not like this one. So the highest price was this so far. So we don't know if this is just resting to start going up from there. But we can say that the last time it left this support line, it reached a new high somewhere here 6 months later, and then after some new highs for a while, it pulled back down to rest. That's when they start creating that support line for the upside wall of the mountain, and then went up again, making new highs, pull back to a secondary support line, and then and so forth, and pull back down again to this one and continue from there. So we are just going to continue observing it. So if we want to go a little bit to the past to see if it tend to make that wide of the wide mountain, we can see that here it made some wide mountain here as well. 2-year time frame that it left that support line and came back to a 2-year time frame. So but it was not as wide as this one though. So and you can still trace some support lines within it. That's just one way to see. If we trace this, for instance, it's just going to end somewhere there. If we started from here, we'll go further there. So this one won't have in. So this area, the is not really a chain of mountain. It's more like, I don't even know what to say to it, but it's a little bit flat at the top, upward a little bit, but flat at the top here, then a pullback. So, and by looking at this, it tends to be upward, and that's what makes it a little bit challenging to know if which one will be the valley line, or if it's going to still use this as a valley line. At this point, we want to keep this, but then if you are looking at the time frame, here is 1-year time frame that it went up, surpassed this highest peak, and pulled back down to this. Here is 1-year time frame before 1 year, 2 years. From there, this is 2024, so halfway 2025, so almost 2 years, it pulled back to it again. So that is in that sense that we think this could be a valley line as well, because of the time frame between the two. But again, I just feel like it's a little bit of steep, and with those jagged teeth that is making, there is a chance it might pull back to this. Not being certain on which one it is, I just prefer not to take any action. Just keep it in the watch list and just keep observing it, because if this is not a valley line, at some point it's going to be tired staying that higher up, and will start to come down to the valley line to rest and start going up again to finish this cycle and start a new one again, or to finish climbing the mountain and climbing down and to start going up again. So therefore, we are just going to keep observing it. If we want to see our previous trade on SY key, we can go down. That'll be this one. So we purchased it in 2024 for $389. We sold it in 2025 for $396 and made for a $3 profit out of it, or 1.88%. So that's still a profit. We didn't lose money there. Yes, we kept it for 3 months or so, and we didn't sell it at a loss. We recoup our initial capital or investment in addition to another $43. And that is $43. We didn't have to work 1 hour for our employer to earn, and I don't even earn $43 an hour. If I remember how much I make per hour, I think it's not $43 an hour in my job. But again, that's just one way to make money outside of our job. So thank you so much for your time. Thank you very much for watching our videos. Thank you for your comments, and thank you very much for subscribing to our channel. I'm Afiabi Liberman, creator of Liberman Consulting L.L.C YouTube channel and ninasoap.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. It does not mean you quit your job. It just means that you use your job and your paycheck as a leverage to allocate a portion of your paycheck to make money outside of your job. And over time, the goal is to make profit from your swing trade. To be able to make profit, you can see that purchase. We purchased it, we got stuck in it for 3 months, and we sold it for a profit. The purpose is to make profit. It does not even matter if that's a small profit, it is a profit. So you start small and you target a small amount of profit. But with this strategy, you'll be making more than $1 profit. But you just want to sell $1 profit after you pay your brokerage fee. If you make more than $1 profit, that's great. You just know that to increase that profit, to double that profit, you just need to double the number of shares you will purchase. The next round, you will purchase that stock again. At first, you just want to see if your strategy allows you to trade that stocks and be profitable. And once you are profitable in it, to increase that profit, you just buy more share, but just that small, especially with a stocks that you have not traded yet with the strategy you are using. Just buy 1 share of it and see, especially with our long option and swing trading strategy and buying it that low and selling it high, you will be able to make a good amount of profit in it. You are going to stay in the trade longer. Therefore, there is no point of allocating a big portion of your capital to one trade. That way you have more money during the month to purchase other stocks in your watch list that start going up, while you are waiting to save some of your paycheck again to put in the account. But to be able to purchase more of stocks on your watch list and to be able to practice your strategy with them and see which stocks are behaving well with the strategy you are using and which one are not behaving well, so that you can flag those and take them out of your watch list at some point. But yeah, just start small, and once you start having that profit, the profit will continue to increase as you are saving more money to add to your account, and little by little you will have substantial income from your swing trade to rise to the level of your basic need. And that's why I said you, so that you do not depend on your employer to provide for your need. When you know that how much you are making from your swing trade is high enough to cover your basic need, probably not your wants, but your need, like your rent or your mortgage, and like every month basic need. Now even your irregular expenses of the year, like car repair or things like that. But while you know every month you pay for groceries, utilities, and cable, internet, why not? When you have enough profit to cover those expenses, you can say that you are making enough outside of your job to provide for your need. If we go back, for instance, to this, and we're trying to see, let's go to monthly. For instance, we have September here, that our September income there may not be a lot to you, but that is a lot for me, in the sense that that could cover our household basic expenses. If we take our allowances that we give ourselves and the kids out, that is enough to cover our basic need without fluff. And that is the goal. Knowing that you can make income outside of your job to put food on your table is what we are looking for. Thank you so much for your time.